Hey, good afternoon, everyone. Thanks so much for giving me your time. I'm just going to give it 30 more seconds because there are a lot of traders still coming into the room. I hope everybody's staying really safe from the coronavirus. We're here in Miami, and we just the governor just gave us a lockdown, so we're going to have to we're all going to have to work out of our homes, and only essential businesses are allowed to operate. But we'll do fine. But it's getting worse, and you can see the market is really heading down. We have an options portfolio that is I am short, and I'll just tell you really quickly before I start the session that the number one stock I thought to buy really a lot of puts on was Uber. I mean, who is going to sit in an Uber in this environment? First of all, no drivers are going to go to work. And if you were a passenger, would you go into an Uber where there were probably 25 people before you, potential secretions all over the Uber, and essentially, unless you had a hazmat suit on, it's basically a contagion box on wheels. And today alone, it's down 10%. And I see Uber really hitting the deck a lot further downside, because it's going to be, I think, months before anyone's going to be able to safely get into an Uber again. All right. Well, with that said, the little bit of introduction, and again, everyone should stay safe and be really careful. What I'm going to teach you today, and we're going to review, is what I believe is really the only profitable way to trade the markets. And I really want to go through this methodically, and I want to make this a very educational session. Now, just a quick disclaimer that all signals and trading opportunities provided both orally, written, or electronically are for educational demonstration purposes only. Those of us here at Right Line Trading are not responsible if you lose money. And everybody should know that participating in the financial markets are risky, and that you can lose a substantial amount of money, and that participation in the markets is not appropriate for everybody. So carefully consider your financial position prior to making a trade. You may want to do your own due diligence and consult a financial advisor. And we are not registered financial advisors and not licensed commodity trading advisors, although we're looking to become licensed trading advisors as soon as Washington opens and we can take our Series 7. So a little bit about myself and why you should listen to me. I mean, every day I get in my I call it my spam email box. I get about 100 emails from companies telling me I can make 150% in a day and take 2,700 straight winners, and I have no idea who I'm getting them from. Well, I graduated from an Ivy League university. I went to the University of Pennsylvania. I was there for many years. I was inducted into the Phi Beta Kappa Honor Society. I was a full-time professor at Jefferson University in Philadelphia. I published 15 peer-reviewed articles. I consider myself first and foremost to be a scientist, a teacher, and an academician. I've mentored more than 30,000 students, and I spoke in over 25 different countries. Most recently, I spoke in Manila, in Thailand, right at the end of February, just before there was this huge outbreak of virus. And while training at the University of Pennsylvania, what my area of expertise was applied mathematics and the optimization of closed systems, of which each financial market is. Each of them is considered to be a closed system, defined by certain forces that move price. What's on us is to determine what those forces are, and that's what mathematical modeling is really all about. Now, excuse me for 1 second here. Okay, now what do 95% of traders use when they trade? And what did 95% of the emails that you get all proffer to you? They proffer to you, one, secret price patterns, or price patterns that have been around for 35 or 40 years and set 95 to 98% of day traders off the cliff, or price action, Fibonacci, Elliott wave, Gann theory, a whole host of indicators and systems like Fibonacci, Gann, and Elliott wave that are supposedly supposed to predict how price is going to move into the future off the right edge of the chart. Essentially, what they're supposed to tell you is market sentiment when you're looking at the right edge. And this is the reason why 95 to 98% have swing traders and day traders have been busting out of the market for the last 40 years. And that number has never changed. It doesn't improve, it doesn't get better, because nothing has ever been proffered that's new. Nothing has ever been proffered to anyone that works. What everyone is still teaching you, selling you, pushing on you is the same stuff that's been around since the 1970s and probably earlier than that. And I'm telling you, it just doesn't work. Now, let's take a look at pure price action. Now, Japanese candlestick patterns are really important, and I've studied them really till I'm blue in the face. But there was an assumption that Japanese rice traders made when they created Japanese candlestick patterns, which was pretty ingenious actually. And that was that the power of each individual bear was equal to the power of each individual bull. And what they were assuming was a closed system in which there was just an abundance, as it was moved forward into the markets, just an abundance of small retail traders like you and I. That there was no big dog in the game to take price action and demolish it. And if the market consisted solely of us, the small retail trader, then pure price action would have significant validity. Unfortunately, that is, as you and I know, and we're going to talk about much more extensively, that is simply not the case anymore. Now, the same assumption was made when price patterns were created. Now, this is a falling triangle. You can see it's got sequential lower highs, equal lows. It's telling you market sentiment, and market sentiment is anticipating off the right edge of the chart a break to the downside and a bearish trend continuation. The problem with this, again, is that the assumption is based on the fact that the power of each bear is equal to the power of each bull. This is nothing more than a more complex assessment of Japanese candlestick patterns and swing highs and swing lows. I mean, this is now here's the same falling triangle, anticipation of the break to the downside, and price just skyrockets to the upside. And we'll talk about why that happens. The problem is that it happens all too often. Now, here's a rising triangle. Sentiment is you have sequential higher lows, that you're going to get the breakout to the upside, because what the pattern is telling you is that all the individual small retail traders are gaining power on the bullish side, overwhelming the bears, and they're going to break this and they're going to break the market to the upside. Unfortunately, again, there's your breakout and your collapse. Now, the JHook pattern has been talked about so extensively. I don't want to beat a dead horse with this JHook. There's a company that just beats the JHook to death. And whether it's an equity or a stock, a future, or a Forex, it takes a real beating to the downside or the upside. It heads down to multi-month or multi-year lows, but there's some level of support here. Buyers come in and they create this JHook or fishhook pattern. And the anticipation is that you're going to start getting a bull flag pattern where the market is going to move up, consolidate, move up, consolidate, move up, consolidate, and head back to price highs. Same problem occurs. You get this buy off the bottom, off support, but then you get the collapse and the break of that multi-month or that multi-year low, and price just continues to the downside. And that's the problem with all of these patterns. They're successful sometimes, but they fail way too often. And remember that small retail traders like you and I have been trading these patterns for 30 years plus, and still that figure remains steady. 95 to 98% of traders go bankrupt, lose their entire trading account trading these patterns because they are no longer reliable. Now, this I saw in a webinar. Obviously, I'm not going to tell you the name of the person, but I listen to a lot of other people's webinars because sometimes I learn a really good information. And the pattern this person was selling for almost $2,000 was this. This is in the webinar, so I mean, this isn't anything I purchased and I'm sending over to you sort of free of charge. This was the pattern. You can see you have a bull failure. Anytime you have a big upper shadow, it means the bulls try to move price to the upside. They fail to reverse the candle. The bears succeeded in bringing it back down. It closed, and what you have here is a bull failure at a hammer. Then you get strong bearish follow through, and you're in one tick under the close of this candle, and down we go. Now that's the anticipation that the presenter said is going to occur a significant period of the time. The only question I asked the presenter was, what is the predictive value of the signal? In other words, what percentage of the time in numbers does it fail and does it succeed? Does it have a 60% positive predictive value, a 70%, and an 80%? And I got no answer. And I immediately knew that this had no validity. So what I did was I looked through the charts myself. And what I did was I found my own pattern, and there were a million of them. And here's that bear failure with a lower shadow. And what you have here is a hanging man. And you have big, and you're going to be in one tick above this candle. And you have big bullish sentiment here, which you ride all the way up. And your anticipation is that you're going to get follow through. But all you get is a down candle and collapse of the pattern. So if you traded this $2,000 setup, you're going to pull in a significant number of losers. Now, what I want to add, and if you've listened to me talk before, you know that day trading and swing trading is never about getting winners. Every day trader that has ever put their hands on a mouse and started trading, whether it's stocks, futures, or Forex, always gets plenty of winners. The goal is to avoid taking losers. And if you can avoid and sidestep losers, That's how you become a really profitable trader. So we want to trade with specificity. We don't want to take a lot of trades, but when we take one and we get a perfect setup, we want that setup to evolve into a winner 85% of the time or greater. And trading price patterns and price action are absolutely not going to get you there. And remember, the proof is the fact that this enormous number of traders who have preceded us have all failed using this system. Now, Fibonacci, to me, is nothing more than a hoax. It has a lot of attraction. Traders are always being pulled to it. And one of the reasons is it's simple. And when you look at it retrospectively, it always seems to have, you can always make a story for it. But here's the thing, Fibonacci was a 14th century mathematician. I've looked at all his work. He created a series of very elegant transformations. Fibonacci numbers do predict certain symmetry in nature, like the number of edges on a snowflake, the number of ridges on a pine cone. But how could Fibonacci levels ever hope to predict market sentiment? And that's what we're making the assumption, is that a Fibonacci level is telling us right here, if price is coming down here, that there are buyers here. And that when price comes, this is going to act as an area of support. And why the heck should that be? Based on a 14th century mathematician's assessment of his transformations hundreds of years before the stock market was even invented. I mean, in no way could this possibly act as areas of support and resistance, because support and resistance is really nothing more than buyer sentiment. If it's support, there's an accumulation of buyers here that when price comes down, they're going to push the market up. If it's resistance up here, then there's a significant number of sellers here waiting to sell the market once price comes up and push it down. There's no way Fibonacci could ever do that. And like I said, you can always build a story for it, but it's been around since the prehistoric era, and nobody has, in my personal opinion, has ever made money trading Fibonacci retracements. And if you just think about it dispassionately for a second, there's no way these levels can actively act as areas of support and resistance. It's impossible. Now, price action, price patterns. Now, I just want to add one more thing. Elliott wave and Gann theory, also, which I've read a number of books on, in fact, a lot of time on Elliott wave. Elliott and Gann also both based their assessments on the fact that the power of each bull was equal to the power of each bear. That's why with Elliott wave, you get that 5-wave pattern. There's nothing to interrupt the sentiment of all the small traders. And small traders have this inherent sentiment to move an instrument up, wave 1, take a small retracement, wave 2, and then wave 3 is that big wave up, then wave 4 and wave 5. And that's what's operational in the markets, maybe at the time of Elliott wave, but not anymore. Because price action, price patterns have limited power. Fibonacci does not define areas of support and resistance. Gann and Elliott wave based their assumptions on the same thing that the Japanese rice traders did, that the power of every bull is equal to the power of every bear, which is us, the small retail trader. And this is what everyone's been trading, again, for the past 25, 30, 40 years. And this is the reason this strategy and others fail so frequently. And the reason is now institutional money controls the market. It makes up 70% of all volume in almost every stock, every futures market, and every Forex market. The small retail trader, we have just lost our ability to move the markets. In fact, when we're the only traders in the market, that's the time you're going to see we want to stand aside. And the reason I created this slide is this is big institutional money coming down. And they're going to grab this candlestick and they're going to either lift it off the chart or they're going to push it right to the bottom of the chart. And they don't care about anything that's preceded it in terms of any of these trading methodologies. Once they get that algorithmic trading kick in, when a computer flips its switch and a big bank starts pushing money into the market, that single entity controls the direction of price, and everything else is essentially defunct, neutered. It is worthless. So these patterns may represent market sentiment until institutional and big bank money kick in and they control price. So in my humble opinion, based on the fact that almost everyone has really not been profitable trading what's out there now, there's only one profitable way to trade, and that is to track the flow of institutional money. And just to recap, this is a market, I wanted to represent clearly, these are all small retail traders, all small marbles. And when the market was like this, and I don't know if it was like this in the 70s because I wasn't trading back then, or even in the 80s. I don't think anyone was trading then. But this is when all of the things that we just reviewed worked. In 1963, George Lane developed the first indicator. He developed the oscillator, and his indicator was stochastic. And what did he look for? Solely divergence. He never traded a trend. He traded a top and a bottom based on the divergence signal created by the indicator that he invented. And back then, I'm willing to bet it worked because it accurately told him what all the small retail traders were thinking. But now trading divergent signals is a disaster, and there's no mathematical way. If you're told that you can be taught how to trade a top or a bottom, I'm telling you, you have to run, because there's no mathematical formula that can ever call a top or a bottom, because the tops and bottoms are called by this boulder, which is just a big marble. And as long as institutional money, like today, for instance, if you tried to go long in the market today, you were going to have a big problem, because the big money and the big institutions were risk off, and they were selling equities across the board. Do you think it matters what the sentiment was of these little traders here, us? If this big guy is selling across the board, Dow, Russell, NASDAQ, and E-mini, and we try to trade price patterns or call a bottom, we're going to get run over time after time after time. So you have to clear your head from all that and understand that there is no top, there is no bottom. The small retail trader like us has essentially no power anymore in determining the direction of the market. Price patterns, price action, Elliott wave, Gann theory, Fibonacci are never going to give you any predictive power off the right edge of the chart. Only this guy is. And this is what we have to track: the flow and direction of big institutional money, whether it be created by a big bank or whatever entity it is. When big institutional money is at work and we're 1/2 step behind them, that's when we're going to make a lot of money. Can't do anything else based on any of the stuff that's been around for decades. Now, A system that can calculate the direction of money flow is the one that's going to make you money. Now the big institutions and banks rotate their money from sector to sector, and that's called sector rotation. And what our system does is track the sector rotation using our proprietary technology, but it's not black box. I'm going to show you exactly how it works, why it's so powerful, and why it's so accurate. Now, today, there was no sector rotation. I mean, big banks were selling stocks across the board. And the more safer havens, like bonds, notes, precious metals, certain currencies, is where they move their money to. Now, they can take their money out of the market altogether, but in general, they have to keep it in play in order to make something for their investors. So what they do is, in general, they keep it in play from one day to the next. They just rotate it around from sector to sector. Now, and here's our money flow tracker trading system. Now, this is our market analyzer, our market analyzer, our stock analyzer, but it can be used on futures, forex, or stocks. And what it does is you can set it on any time frames you like. You can trade. You can put it on a 5-minute, a 15-minute, a 1 hour, a 4 hour, a 5 range, an 8 range, a 5-minute, an 8 range, and you can watch an innumerable number of stocks, futures, and forex. You can mix and match. And when money flow aligns the market, it's going to give you a buy signal. This is your 5-minute trading chart. And this is going to give you a 5-minute entry. You don't need green, green, green across the board. You just need green on the chart you're trading. This is a 15-minute buy. This is a 15-minute sell on Johnson & Johnson. So you can use this not to track momentum and be one of the breakout traders and the Momo boys, or to track price patterns or market structure. You're going to be using this to track the direction of money flow and big money. And when you get a green buy or a red sell, you're likely to get a very, very nice trade. Now, I wanted to show you real quickly a trade that we took in the trading room. I'm going to move it all the way to the end, so you don't have to wait. But the candle halo, which is blue, has meaning. These 3 lines are all metrics that define the direction of institutional money. And everything on the chart that you see has value. We just broke a pivot. And here's our first target, and here's our second target. And we always trade with chart trader up. Our stop and targets are always projected. And you can see once institutional money grabs the trade, it blows it up. And the trade's out. Now, this happened to be on crude oil. Now, how much money you made on the trade is dependent upon how many contracts you traded. If you traded 2, you made $220 bucks. And if you traded 3, 4, 5 contracts, you just made sequentially more and more money. But that's the kind of moves you get when you trade in the direction of institutional money. And you'll notice that we use Unorenko bars. We've obliterated price action and price patterns because they have no value and they have no relevancy in the market today. There's no reason for us to even use them. We use a very modified type of Unorenko I'm not going to say it's proprietary. There may be other software that has it, but I've never seen it in any other software. Now, there are 3 key metrics that determine money flow direction. The first are our correlative markets or neural net, and I'm going to discuss that last. The second is the multi-time frame assessment of Laguerre momentum. And the third is the multi-timeframe assessment of order flow. And again, if you've been in my lectures before, you may have heard me talk about order flow. And order flow is a very, very important assessment of big money. Now, let's talk about order flow for a second. Now, one thing that you have to remember, and if you take anything away from this lecture, and you know, I had lots of professors when I was in college, and I had one. His name was Dr. Galliani, and he was of Indian descent, and he used to stand up in front of the lecture hall and say, "I want to remember for all time to come." And this is a guy that I never forgot. And I mean, I have a million professors. I couldn't even tell you their names. But this guy just really cracked me up when he would always say, "Remember for all time to come," and you write it really big on your notes because you knew it was important. And what you have to remember for all time to come is that no indicator that assesses data from your trading chart will ever have any future predictive value. They all lag price, and it doesn't matter what it is. It doesn't matter whether it's stochastic, MACD, the million other indicators that there are out there, and that includes order flow. Order flow off your trading chart cannot provide you future or forward-looking information. It can tell you the market is where it's been, but it can't tell you where the market's going to go. But what I simply want to do here, right off the trading chart, is just give you a quick explanation of how order flow is calculated. Now, if this is a stock, each value here is a cent. If this is Forex, each value here is a pip. And if this is a future, each value here is a tick. And at each level, there are buyers and sellers right off the trading dome, even on Forex. It doesn't make any difference which server or data it is using at any given moment. It's always going to have a fixed number of buyers and number of sellers at every price level. And it doesn't make any difference if this is a candlestick or an open, high, low, close. At every tick, pip, or cent value you're trading, you've got traders sitting at the bid and ask. And the market delta value simply sums them all up and tells you whether there's an overabundance of traders looking to buy, an overabundance of traders looking to sell. And this is very commonly offered and very commonly taught incorrectly. Now, this is a chart that shows you the absolute value of the market delta. So if it's rising, you're supposed to assume that price is going to rise. Unfortunately, that assumption is wrong, because you'll notice right here, here's a 222 green, which tells you there's an overabundance of buyers, but the candle closes to the downside. Here's a negative 220. There's an overabundance of sellers, but the market closes to the upside. So the market delta does not always tell you the direction that the candle is going to close. So if you try to trade it off your trading chart, you're going to get stopped out a lot. In fact, statistically, at least 1/3 of the time, you're going to get stopped out, because one standard deviation's worth of data created by the market delta on your trading chart is accurate. So the outliers outside that bell-shaped curve are the ones that are going to give you an incorrect value. And inside here are stacked buyers and stacked sellers. That's another system that's taught to you to leverage these to try to get a buy or a sell, and you can forget that. But the reason why the market delta on your trading chart doesn't work is really pretty simple. And that is, even though there's an overabundance of buyers here, that's an accurate number, the sellers are simply more aggressive. I mean, if this is a stock selling at 50 bucks and the sellers are willing to take it off your hands at $49.99, 98 cents, 97 cents, but the buyers are only willing to take it off your hands or at $50.01, the sellers are far more aggressive than the buyers. So the aggressiveness of the sellers overdrive the fact that there's an overabundance of buyers. So what we have to do, this is an important metric and an important value because it works one standard deviation's worth of the time, which is 2/3 of the time reliably and predictably. And if it does, all we need to do is find a way to throw out the outliers. And we have. Now, all of our data is always calculated off the 2 higher time frames. Nothing is ever done off the trading chart. If you look at anything, like I said, on the trading chart, it will give you no forward-looking power. But if you calculate it off your 2 higher time frames, then it's going to provide you with forward-looking ability. Now, what I did was I put up 2 higher multiple time frames, because if you're trading a minute, you're going to look at, let's say you're trading a 2-minute chart. You're going to multiply that by 3, and it's going to look at a 6-minute, and then multiply the 6 by 3 and look at an 18-minute. So the assessment's going to be off the 6-minute and the 18-minute. If you're trading a 5 range, it's going to take the 2 higher fib numbers. Fibonacci has symmetry. It just doesn't tell you market sentiment. So if you're looking at a 5 range, it's going to look at the 8 and it's going to look at the 13. If you're trading a tick chart, again, it'll default to the closest fib number on the tick value and then go to the 2 higher fib numbers. The same thing with Unirenko and Renko. And what it does is it looks at all the market delta values created on these 2 higher multiple charts, and it places them into a 15-period simple moving average. And because you're looking at the average or the summation of the last 15 market deltas, there's going to be 3 market deltas here that are aberrant or skewed. But that 15 period smooths them out and takes them, and it sort of minimizes their effect on the slope. So when both 15 periods are sloping to the upside, we know that only institutional money can create that alignment. We as small retail traders can never do this. We can never create a multi-time frame alignment of anything, and especially something as complex as this. And when both 15-period SMAs are sloping down, the bears are firmly in control, and we know that institutional money's at work. The order flow assessment is red, and when the 15 periods are not in agreement, we get a yellow line. And it's as important to know when not to trade as it is when to trade, because remember our #1 mandate. It is to avoid losers, not to get winners. So here's an example of that moving average on the 2 higher multiple time frames. It's called a triple screen assessment of order flow. Now, I didn't invent the triple screen. Alexander Elder invented the triple screen back in 1997. And when both of these slopes are heading down, price on your trading chart is almost always going to fall. So you're now getting an absolute direction to trade off a multi-time frame assessment of this particular metric, which is order flow. And this alignment will never take place when small retail traders like you and I are banging around the market. And here's an example. When this order flow line goes green, it's going to lead price. It's going to turn before price turns, and up you go. Now, who's in these red candles? Who's counter trend trading against order flow? Well, it's the small retail trader that's trading all the things I mentioned: divergent signals, MACD resistance, Elliott wave, Gann theory, price action, price patterns, whatever it is. But the fault in their reasoning and their logic and the flaw in their trading methodology is that they somehow believe that they can call a top, and they can't, because as long as institutional money continues to press price to the upside, there will not be a top. So any system that is giving you a top while order flow is still in the control of big money is just going to get you stopped out. And remember that when you get these counter trend traders, They just help us. Doesn't matter what market we're trading. When we continue to the upside, we're going to stop them out. And as we stop them out and they buy back their shares or their contracts or their lots, they're going to help push the market in the direction we want it to go. The second one, or the second force, is the Laguerre momentum. Now, here's the Laguerre on our trading chart. And the Laguerre is an RSI oscillator. It's a bounded indicator and a stochastic, but it's different than all the rest. I didn't put the formula here, but because I have it in other lectures. I didn't want to burn this lecture with it, but its formula is very different than the other oscillators, because the Laguerre was made not to look for divergence, but it was made to look and track the direction and acceleration of price. Now remember that momentum is a second order derivation. It is telling you not price speed, but price acceleration. So when the Laguerre line is moving down, price is accelerating to the downside. And that is the close is approaching the low of the candle. And that close continues to squeeze lower and lower to the low of the candle. And once the close begins to start inching off the low, then momentum is turning and price is going to start potentially accelerating to the upside. It could just achieve a fixed speed, in which case momentum is not changing. It's only the change in speed or velocity that creates a change in momentum. Now, because the Laguerre is created not to look for divergence, it's the best momentum assessment to track on a multi-time frame basis to tell us when big money has made a multi-time frame alignment in momentum. And again, we look at the two higher multiple time frames, and that's part of the algorithm of the indicator. You don't have to worry about figuring it out. It's done by the indicator itself, and it doesn't matter whether you're trading time tick, range, Renko, or whatever. But when both momentum lines are sloping to the up, then bulls are firmly in control and institutional money's at work. When both momentum lines are sloping down, the bears are in control and the line is red. And when both momentum lines are not in agreement, we don't trade. So now we have two lines. Now you'll notice here is the Laguerre on the two higher time frames. This is the %K line. The Laguerre throws out the signal line. It doesn't care about the signal line. The signal line is irrelevant, and I like that because I don't care about the signal line either. All I want to see is that there's an alignment in price acceleration to the upside on my two higher multiple time frames. That's all that matters to me. I mean, the signal line to me is irrelevant. And when I get that alignment, only institutional money can create it, and price is only going to move to the upside. Now we're going to combine the two to make it even more apparent when big money is at work, make it tougher for us to trade. But like I said, we're not looking for a lot of trades. We're only looking for a few great trades. And now we need both Laguerre momentum, which is the upper, order flow, which is the bottom, to be both red on a pivot short or green on a pivot long. And we know we're trading in the direction of institutional money. And you'll notice we don't care about price patterns or price action. We don't care about Fibonacci, Elliott wave, or any of that stuff, because big money doesn't care about it. I mean, they don't care if you were on an engulfing candle when this kicked in. They're just going to ram price to the upside, and we've got to be in either right with them or just a little bit behind them. And now the last force is the quant line. which is really our most novel and powerful assessment. And here's the E-mini and here's the Quant Line. Now the Quant Line does not look at price on the E-mini. I'll show you what it looks at. On the E-mini, it looks at its correlative markets. So what it does is the Quant Line looks at the multi-timeframe direction of E-mini's correlative markets, the Dow, the Russell, and the NASDAQ. So in order for this line to be red, you have to have the Dow heading down, the Russell heading down, and the NASDAQ heading down. That creates this red line. The fact that the E-mini is heading down is a result of this red line. It doesn't cause the line to go red. This line isn't looking at the E-mini at all on any time frame. It's looking at the Dow, Russell, and NASDAQ on a multi-time frame basis. That's why when this line is green, you've got the Dow, Russell, and NASDAQ moving to the upside on a multi-time frame basis. Price on the E-mini is almost always going to move to the upside. Now, that's not to say you may get some winning moves without this alignment. They occur. But the risk associated with taking a trade without this alignment is substantial. And our goal as day traders and swing traders is to avoid risk because we don't want a trade to blow up on us. So we're going to only take a trade when the correlative markets of whatever we're trading, it could be crude oil, it could be Google, every market is interlinked. No stock moves on its own. Institutional money moves stocks in groups. They all have correlative assessments, and that's the whole foundation of the neural net. We all know that that's not an assumption. That's a proven theory, and it really is market dogma. And this Quant Line is very accurate, and I never trade without it. Now, the reason it's called a Quant Line and not a correlative market line is because each of these markets correlate in direction with a different correlation coefficient. The NASDAQ moves really tight with the E-mini. The Dow less so, and the Russell less so. So the NASDAQ is quantitatively weighted more in this line than are these two markets. So we have quant lines for anything that you want to trade, futures, Forex, or stocks. And the futures quants, the Forex quants are very easy to assess because of the money pairs and finding those correlative markets is really not difficult. Now we have three lines. Line number one is order flow. Line number one is our correlative markets or quant line. Line number two is momentum, and line number three is order flow. Now, when we don't have all three lines, the retail traders like you and I are at work, and we're just gonna push the market up and down really in an incoherent fashion because we're too small. I actually automated the slide just to try to highlight for you how important it is to stand down when you don't have big money operational in the market. When you have green, 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 you're going to trade long only because big money is pushing whatever you're trading on whatever time frame you're trading. I purposely left the time frame and the size of the candle and the market out because those are all irrelevant parameters. This is a market independent, time frame independent assessment. And if it wasn't, it would be broken. If something only works on Forex and not on futures, stocks and not on Forex, there's something wrong with it. And if it doesn't work on any time frame, there's also something wrong with it. If it actually is harnessing some universal force that moves price, it has to be operational on any time frame and on all financial instruments. And again, you see on this long trade, a trader caught counter trend. These are a bunch of traders here. And here, calling a bottom, calling a bottom, calling a bottom, which is just not possible to call as long as big money is selling this market and they're shorting this market, whether it's stocks, futures, or Forex. No mathematical equation is going to call a bottom. No divergence is going to call a bottom. Nothing. You can trade is short. Let the other small retail trader make their mistakes, the ones they've been making for 40 years, and we're going to capitalize on that mistake and let them help us push the market to the downside. And here's another example. Green, green, green. We're going to wait for the price to move up. Red, red, red. Now, small retail traders do create small retracements, and we love those retracements. When we've got red, 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 and we know big money is selling this market, when the small retail trader comes in force and tries to push the market in a counter trend direction, it's wonderful because we're going to take the down pivot and run them all over. When you get these 3 counter trend candles, we run them all over. The 1 counter trend, we run them all over. And as long as we've got red, 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 we can continue to short the market. And then when we lose it, we stand down, because that's when we are not clear that institutional money, big banks, whoever they are, whatever institutions flip that switch, is at work anymore in the market. And again, I don't want to beat a dead horse, but I want to highlight how irrelevant price patterns, price action, all the other things that people are trading are. They're just irrelevant. And 99% of the emails I get are secret price patterns, pulling back the curtain on this. They don't work. Now, I'm going to skip that slide. Now, here is, we do use one indicator to help us with our entries, and it only assesses price on our trading chart. The reason we can get away with it is it requires the flow of institutional money in our direction to validate the signal. So when we get this is an exponential oscillator, and we've simply taken the standard stochastic indicator, raised it to the 2nd power, and created a geometric assessment from an algorithmic assessment. So when the %K line crosses the cyan line to the upside, you're going to get a blue up triangle for a long trade, red triangle for a short trade, blue triangle for an up trade, red down triangle for a short, blue up triangle for a long. So here's your perfect trade. There's the cross, there's the triangle, there's the green, and up we go. There's the cross, there's the signal, there's the red, 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 and down we go. So we're always trading in the direction of institutional money. Now, we never counter trend trade, and I will define that for you in a second. We would have taken the long signal, but not the short signal. And there's a reason for that. But you're going to get now low risk, potential high reward trades using and leveraging the direction of big money. Now here's a trade right here on the entry. Up we go. That's a neutral candle that's haloed in black, and occasionally you'll get them. Order flow can flip you a neutral even inside of here. And we do a master class if you come aboard, and I'll show you exactly why that happens. I wanted to take the chart right off of Ninja, and eventually when these 3 metrics turn, the candle halo turns, and you're out of the trade. Now here's one of the big pluses on the system. You're out on an up candle. Remember, we said that the 3 line or this assessment leads price. Well, it does. And if this is telling you now that the 3 line is aligned to the downside, and we're likely going to get a move down, and we're going to exit on an up candle. And that's going to save us a lot of money on the pullback. And here's the same thing to the downside. Now the actual exit is right on this blue halo. And the candle halo actually reflects these 3 lines. We make it easy by projecting the results of the metrics associated with our quant lines, our momentum, and our order flow right onto the candle halos. The neutral candle halos, we stay. On the reverse, we are out. And we exit a short trade on a down candle. So we want to get everything that we can in our favor. So we have just a couple of other things that we use, which are extremely important. And really, if anything reflects the direction of institutional money, besides the 3 metrics that I just showed you, this one does. It's the multi-timeframe alignment in the trend of whatever you're trading. If you want to trade the E-mini, you want it to be long, you want it to be aligned to the long side on a multi-timeframe basis. What if it's aligned long on your trading chart and short on your higher time frames? The likelihood of taking a winning trade is very small, irrespective of anything else. So there are 3 down colors and 3 up colors. I'm not going to go into what they all mean, but the strongest down color is dark pink and the strongest up is dark green. These are your sweet spots to trade. You're in a strong multi-timeframe alignment to the upside or downside. So this is just background bias. Now, on 99% of charts that reflect background color, they're just looking at price on your trading chart. They're using a MACD. It crosses over. The background turns pink. This is pink because your 2 higher time frames have price below the 50. The 50 is red. This is red. Everything is heading down, and the likelihood of losing a short trade are very small. And here's your alignment to the upside on a multi-time frame basis. You'll notice everything we do is on a multi-time frame basis. These are different powers, but they're all up alignments, and price is almost always going to rise on your trading chart. It's a lot, but we don't care about getting a lot of trades. We care if when we enter the trade, the likelihood of getting a winner is 85% or greater. That's all you should care about. And if you don't have the patience and discipline to wait for all of this to align, you won't be a successful trader. You can't sit on your hands. And it's one of the problems I have the most with personally is waiting for the juiciest setups and not jumping the gun. Now we have to have areas of support and resistance, and these are pivots. Now, again, we use pivots that are created right off the chart, and those are important every time market turns. Our pivot sensitivity is turned way up, so you don't get a lot of pivots. We need a big swing in the market to create a pivot for us. And then what we do is a multi-time frame assessment off the volume ladder to tell us where there are an overabundance of buyers sitting, and we call these buy zones or buy sell imbalance zones. And these are multi-time frame assessments. We never trade into them. And see what happens? It comes down, 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 and goes right up. In the course of a day, when we trade, I can't tell you the number of times price will bounce off a pivot or a zone. A zone is tougher than a pivot, but if you can't predict or make a numerical assessment or assumption as to whether or not something's going to occur, like a break or a non-break, then you have to stay undecided on the trade. Can't trade into this. Sometimes it walks through like butter, and sometimes it'll bounce 6 or 7 times off of here. So the only thing you can do is stand aside. And here's up, up, up. And actually, I actually made a video that I sped up for like 10 minutes, and you just see price going up and down like this, like a bouncing ball between areas of buy, sell, imbalances. So if you don't have a big account, or you really want to trade options on an entry, you buy an at the money or in the money call if you're going long, or you buy an at the money or in the money put if you're going short. I mean, it really is that simple if you want to day trade options. As long as you're sure whatever you're trading is going to move in the direction that you predicted, you're going to make really good money on the option. Now, the option we trade is usually a weekly. It's almost always a weekly. It's in the money or at the money. The delta is better, for every unit incremental change in price of the underlying stock. You'll get a better incremental change in price of the overlying option. So you get more action. They're easier to manage, and we never buy out of the monies. So let's put it all together. Now, the system is going to give you an exact entry, an exact exit, and we configure all your targets based on the average true range of your instrument. And I know I'm running through this fast. I just don't want to keep you a long time. And when I'm done, I'll answer any questions that you have. Now, here's a long on a Vago. Here's the cross right here. You get the triangle right here. This is a 2-minute. Green across. Now, here's the oscillator signal cross. If the 3 line or the 3 metrics turn, or the oscillator gives you an exit, you have to leave the trade. So this was a $10.12 move on a 2-minute chart of a Vago, which I like to trade. Obviously, if you traded the actual stock, you made nice money. If you traded an at the money or in the money option, you made really good money. Here's Fiserv. Here's your cross. There's the triangle. Down you go. You can see all 3 metrics change. Money flow has changed direction. You're out of the trade right here. It's a $7.05 move. It's 9% on a 10-minute chart. Now, I like trading time charts on stocks. I don't like trading Unirengo. Here's Google. There's your entry on this bump right here. Up. And up we go on Google. You're out on the oscillator cross, even though you still have these 3 metrics telling you that money is flowing into Google. When you get the oscillator, you got to exit. It's a $51.66 trade on a 30-minute of Google. It's a multi-day hold of Google. Here's Amazon. It's almost a $100 move on a 15-minute. Here you go. Oscillator long, up. And there's your oscillator cross right here. Just crosses. And you're out. And that's just under $100. If you got it in the money call, you made 1 bundle of money. Now I put up the slide to show you that you can trade micro caps. Here's McEwen Mining, and here's the entry on the cross of the oscillator. And as long as you got, big money moves micro caps too. Up it goes. Now the actual move on McEwen Mining was 7.5 cents. We only made 6 cents on the move, or 8.5%. And I love to trade McEwen Mining. I'm trying to get into it now and actually own the stock. Only I'm waiting for a pullback to 60 cents. Now, if you want to trade the SPY or the Qs, it's a terrific system. There's your cross. There's the triangle. Down you go. There's the cross back up. That's a $17.24 move on a 10-minute of the SPY. Here's the SPY on a 30-minute. There's the cross. There's the triangle. There's the move all the way down. And there's your first cross of the magenta line. And you're out here. That's a $26 multi-day hold of the SPY on a 30-minute chart. You can trade a 1 hour, a 4 hour, a daily. It doesn't make any difference. Here's the cues. They have less volatility. There's your entry right here. You're down on the out on the exit on the triangle, up $6.78 on a 5-minute. Here's the cues on a 2-minute, $4.78. Now on crude oil and the futures, I like to trade Unarenko. It's just my personal preference. You can still trade minute, and you can still trade Unarenko on stocks. There's your oscillator entry right here. There's that multi-timeframe alignment of crude oil to the upside. It's a 2-5-10 Unarenko, and you see you lose order flow here, and the candle turns. You'll lose that blue halo, and you're out of the trade. Here's gold up. It crosses, just nicks the oscillator to give you an out, but then it comes right back up to give you a long, and you go back in again, and you're out here on the turn of order flow. And here's the E-mini. Big money is buying it. Everything's aligned to the upside. You're out on this cross right here, 10.5 points. Now, I covered up the triangle, but either way, you do get a cross of the oscillator, but you can see the candle halo has changed on the loss of order flow. Order flow is the one of the 3 metrics that's the most sensitive. It's the most sensitive to the pullback of big money. When you lose it, it's going to be reflected in the candle halo. Now, you can also trade it on the Forex. Here's the euro pound on a 10, 20, 30 Unarenko. That's a huge candle. That's 24 pips and 66 pips. And here's the euro USD up 32 pips, right to resistance, and price is rejected. Now, obviously, all I did was show you winning trades. And I'm never going to represent to you that you're only going to get winning trades. But what I am going to represent to you is that your entries are low risk. And if you really trade with discipline and patience, you're going to get about an 85% win percentage, as long as you have the ability to sit and wait. Now, I have 3 video clips of 3 testimonials, and I'm not going to play them. They're very compelling testimonials. One of a college student who made about $75,000 last year, another of a senior in college who's a systems engineer, and the third of just a guy in retirement who's making nice money every day to augment his retirement. I mean, they're all real, genuine testimonials, and but I'm not going to take the 2 or 3 or 4 minutes to even bother to play them. But I'll play one for you. Well, I'm not going to play one for you because I don't have any volume, and I'm not going to worry about it. So don't worry about it. So let's just continue. So here's in 2019, our stock performance, $130,000. A lot of options here, a lot of them. Now, trading success really does equal financial freedom. I mean, if you can achieve it, And I'm bringing to the table a system that works, that's different from anything that you've seen before, and that leverages a completely different trading methodology. And if you can master it, it will work for you. And you can gain financial freedom. You can work from home, you have no boss, you have no commute. You have coronavirus, everybody else who's closed their store, closed their business, you still sit in front of your computer, you still make good money. It really is a blessing. And I have so many traders in my trading room that make such good money every day. It's amazing. Now, here's the system, and you're going to get a lot of add-ons. Now, it is easy to learn. I mean, you can see the workspace is very intuitive. It's great if you're, in fact, I think it's better if you're a beginner. You don't have to unlearn any of the stuff that's been ingrained into you about price action, market structure, and all the other ways that you could potentially trade that are all going to just walk you off the cliff. You can trade with a small account size. I have traders who trade one contract on the E-mini, which I think requires about $400 or $500 in their account. Now, I know they have a little bit more than that, but you can start with a small account size. If you want to trade stocks, you can just use the underlying option. And what I'm offering is the software for sale. You're not going to pay me on a yearly basis or a bi-yearly basis. It's yours. It's not a subscription. I don't believe in that. And you're going to see a couple other things too that makes this offer different. Now, it can be configurable to use with any platform, but I want to make this clear to you. The indicators will only appear on NinjaTrader 8. But if you have Thinkorswim, if you have E-Trade, if you have Interactive Brokers, if you have a Wanda, and there's a multitude of others, they create an API and we can use your data feed to power Ninja for you. So all we will do for you is download a demo of Ninja, power it with your own data feed from your own broker and your own brokerage system. And you can take the signals and trade them on your account, whether it be Thinkorswim or whatever, and have it powered by Thinkorswim. The API on Thinkorswim, E-Trade, Awanda, Interactive Brokers is terrific, and we'll give you great data. Now, you're going to get the market scanner. I mean, if you want to trade stocks and you want to look at 100, you just want to click in the entire NASDAQ 100, or you want to look at the Dow 30, or you want to look at 12 to 15 Forex pairs, this is only going to give you a signal when you have money flow alignment. It totally disregards price action, markets, price action, and price patterns. Now, if you have technical prowess, no, I don't, but if you do, you're going to get a quick start guide and you can be up and running in literally 20 minutes. The API is really easy to bring across, but if you can't, Sergio's here. He's a master's in computer programming. He'll do the complete installation for you. He'll log onto your computer. He'll do the complete installation. If you ever get a glitch in the future, you just call us and he'll take care of it for you. Now, this is really a big deal because remember that our philosophy in terms of the optimization of a closed system, or understanding what forces are operational in a closed system, is never done. And we're always providing upgrades and add-ons. In fact, on Friday, I'm going to give a webinar for a new indicator that honestly that has never been invented before, that you're going to get for free if you own the software. And everyone else is going to pay a lot for, because it's really novel and I have never seen it used ever. It is a very, very different way of creating an analysis. And I'll just give you a little bit of a peek into it. What it does is it uses certain data from the cash markets to predict how price is going to move on the futures markets. And it really is going to help you with stocks, and it's going to help you with trading futures, because it's going to give you an incredible window into what's happening, say, on the S&P 500 if you're trading the E-mini, what's happening on the Russell 2000 if you're trading the Russell futures. So it's really, really different and very powerful. And that's an upgrade and an update that you're going to get for nothing. Now, you get unlimited VIP support. And unlike anybody else, if you call us, you're never going to get an answering service or voicemail. And those of you in the room who know me, I mean, we're here all the time for you. You're never going to get played by that. You know, you buy the software and then we hide under a rock. And you know, I listen to other traders' webinars, and I go in and I have a question, and when I call, I get voicemail and an answering service all the time. And when I leave a message that it's a question regarding the system, I don't get a call back. If I leave a message that says, gee, I really want to buy, then I get the call back. But we're always here to help you, and I'm always here to support you. Now, we do the coaching calls. And the last coaching call lasted for 3 hours. We're going to do it next week. And in that coaching call, everyone who owns the software is going to attend. We have an enormous number of traders. It's open chat. You'll be able to talk back and forth to the other traders who are on the system. I'm going to moderate. They're going to provide you with their insight. Maybe they'll give you their email address or their phone number. What we look at is we're a small community of retail traders, and we are pitted against all the other small retail traders. We can never take money away from the institutions. They create the trend. All we can do is trade with them. If we counter trend trade them, trying to take their money, we're going to get blown away. They're going to run our stops, in fact. And we're very supportive of each other, because I really believe it's sort of, in a roundabout way, it's a sin to close up and let the other retail trader have your money, or trade against the big institutions, which will love to take your money and run your stop. But in general, who you lose against is the other small retail trader. And you saw them in every trade, counter trend trading, the direction of big money. Well, we want to take their money home every day. And that's why everyone in this coaching call is so supportive, because I really believe that we as a small community should be the winners in almost every session. And we're not going to win every session, but we should come close to winning the vast majority, 8 out of 10, maybe even 9 out of 10. Now, if you add it all up, it comes to $6,865, and I don't want to do a big pitch because it's a waste of time, and I don't like it when I listen to it in other webinars. Now, the investment is $997, and that's for lifetime ownership. If you order, you're going to get 1 month in the live trading room with me. Your ability to learn and trade is going to be, I mean, your learning curve is going to really skyrocket. I take every trade with Chart Trader. You saw the one trade that I demonstrated today. My targets and stops are projected. I call the trades out in advance. After the session is over, we go over all the trades. We look at all other markets that you may want to look at that we haven't traded. Now, I want you to know I trade futures, and you may want to trade stocks. But if you want to learn the methodology, it's the same. So if you want to learn how to trade this system, it gives you a great opportunity. And if you're willing to step back for a second and say to yourself, you know what, I'll trade anything that makes me money. In the month that you're in the live trading room with me, maybe you will cave in a little bit and decide that you want to trade futures. Now, you don't have to enter any promo code. We eliminated it for this webinar. Normally the promo code is Money Flow Tracker 3, MFT3, but it's just $97. And the promo code expires in 24 hours. And so really, I put this in because it's really true. You have two options. You can do nothing and then continue on your current path. Now, if you're making really good money every day, then maybe this can augment what you make. But you're in a good spot. If you're really confused, you don't know what to do, you're really turned inside out, and you're blowing a whole bunch of accounts, I'm telling you, this is going to turn this is going to turn you around. What I bring to the table is a software system that works. What you have to bring to the table is patience and discipline. If we meet, you are going to become a successful trader. I have too many traders in my training room that make big money, and I know that the system is effective. Again, it's $997, 1 month in the trading room, and you'll always get the upgrades and the add-ons. And I'm telling you, all the support that we can muster here in the office. So let me answer any questions that there are. Hang on. Whoops. Okay, there are a few. In fact, okay. Hey, Mike. I think you got audio now. Hey, Robert. Yeah, you got him, Robert. I can't mention the name. Robert knew who I was talking about with the price patterns. I listened to his webinar, Robert, and I don't want, but it would be unprofessional of me to read out what you wrote, because I never mention other people's systems in the webinars, because I don't want to get into an argument, and I just don't think it's professional. But you're right on the nose. Hey, Ahmed, I want to learn trading. Can you learn? Listen, that's my job, Ahmed, is to teach you how to trade. I mean, that's my job for everybody who comes into the trading room. I mean, listen, I'm going to do my best for you. I mean, trust me. Rory's here. We have Sergio here. We have Giovanna here. We have Prashant here. Everybody is here to help our traders. We're a small community that I want to support to the utmost. Hey, Theo. Yes, Theo, the software works great for Forex, and it works really good with options. Listen, if you can predict the direction that a stock is going to move, you can trade terrific with options. And today in this market, I have another service where I do options trading. We made a mint, and I'm not kidding you, because I have the Dow. I have the Dow, 3 times leveraged short. And let me ask you one question. I remember I started at the beginning. You would not get into an Uber coronavirus machine during one of these issues. So I have a ton of puts on Uber, and Uber is already down, but it is I don't think anyone's gonna get into an Uber for months. You may be a little late into it, but this system works great on stocks, and I will not take a trade based on fundamentals only. I have got to take a trade also with the technicals aligning. And I'll just tell you one other thing. Somebody put a $3.5 million call position today on Microsoft. I didn't follow, because Microsoft is not aligned on our software yet for long. When it pulls back to support on our software, because I know I've got somebody else willing to take. They took a $3.5 million, $170 call position that expires in September, in September of this year. So I put that stock on my watch list. But you can day trade them on a 2-minute, a 4-minute, an 8-minute, whatever you want. Hey, Aid, how you doing? We do that for you, Aid. Sergio will sync it for you. He will sync the scanner with the chart. Whatever your chart speed is, whatever time frames you want to trade, Sergio will make that scanner display, display those time frames. I'm telling you, don't worry about any of the technicals. We will do that for you. Hey, Ray. Okay, that's a great question, Ray. Does the system perform better at certain times of the day, eliminating unprofitable run of trades? And Ray, the answer is 100% yes, and it is based on one metric that I did not mention, and that is volume. Now, the system comes with a unique way of assessing volume, and I really didn't go into it, but you need to have decent volume to support the trading. And why, Ray? We need to know that institutional money is at work. If we have, say, on the E-mini, 300 or 400 contracts crossing per minute, we know we've got no volume support. And you know what we call that? We call that the candles are floating on air. And they're subject to abrupt turns, and that's when you're likely to get stopped out. So no matter what system you're trading, it's got to be supported by significant volume. And we define that volume really well on the charts. What we do is we don't use what do they call that? We don't use that standard indicator. In the lower right-hand corner, we have an indicator that actually shows you the number of lots, shares, or contracts crossing per unit minute. And we're soon going to put up the number of candles crossing per unit minute. Each one of those are independent assessments, and they make a big difference. So if you have big volume crossing on a lot of candles, you got a nice trade. If you have low volume and a low number of candles crossing per minute, that's when you step aside. And that's after hours. That's maybe around lunchtime. Never take a trade in a low volume environment. It's always risky because the big money is not at play. You're unlikely to get an entry, but listen, once in a blue moon you will, and you don't take it. There will be a recording available. Oh, gappy stocks, Ray. That's another terrific question. Now, trading gaps, in my personal opinion, and this is just in my humble opinion, I think is a lot of baloney. Now, here's the thing, Ray. Who creates the gap? The gap is created by the small retail trader free market. Institutional money, big bank money, is not at work pre-market because there's not enough liquidity. I mean, to handle the massive amount, say, of shares they want to buy or sell is impossible. So the gap is created by the small retail trader. They see some kind of news that's come out and they push the price all the way up. If you want to see what's going to happen to the stock after the market opens, you wait a minute or two and wait for institutional money to step in. They're either going to push the trade back up through the gap and higher, or they're going to ram it right back down. So you wait for the stock to gap, you wait for the market to open, you wait for the retail traders to have their day. Remember, very few of them have made money on the trade, except for the ones who got in at the bottom. A lot of them are really worried because they're halfway to the top of that price ladder, and they need the stock to continue up. Wait till it opens and wait for the alignment with big money, and that's really how you trade a gap. Well, that's the thing. There shouldn't be, and that's another great question, Ray. Are there any emotional decisions? And listen, the system is devoid of emotional decisions. It's very, very precise with its entries and its exits. And what it tries to, and what it does do is eliminate any discretion on the trade. You have to wait for everything to align. And if you try to jump the trade or game the trade, I call it, like saying, okay, I think that pivot's going to break. I'm going to take that trade into the pivot. You're going to get beaten up. What's projected is really the way to take the lowest risk trade and the highest potential reward trade, and don't let your emotions, get in the way, because they will hurt you. And of all the things that happen, I think for me is like I'll have a 12 tick first target on the E-mini. I'll have a 27 tick second target, and it'll go 11 ticks, miss my target by 1 tick, and I swear, I got steam coming out of my ears, and I want to like revenge trade. I have to sit on my hands and not revenge trade. Go after that next trade without a perfect setup, because those kind of trades are going to happen. So you have to really be dispassionate, and that's all part of discipline, right? Hey, MP, how does insider buying or selling affect the software signals? Well, insider buying or selling, MP, always is announced after market. Actually, you know what? I think it may be announced. It may be announced in the middle of the day. That I think it's a Form 4 will be announced that somebody took an enormous position. Personally, listen, when it comes to big news, like today at 10 o'clock, there was news. At 10:30, there was crude inventory. You stand aside when any kind of big news comes out, because the only traders that are going to trade that initial report are the small retail traders. The institutional traders will move in about 2 to 3 to 4 minutes later. They'll digest the results, decide how they affect the economy, and they don't do that the second they come out. And sometimes their assessment is extraordinarily different from what you would assume. Like there's a big drawdown in crude oil, and you'd think the price would go up, and big money pushes it down. So, but insider buying or selling, I haven't found that to be a big intraday mover, MP, really. I think it's a very bullish sign long term, but I haven't seen that give the market a big jolt, unless it's a micro cap with a very, very small float, in which case it can make a difference. And remember, trading micro caps with small floats is a whole nother ball game, and you have to be very, very careful of those. But I showed you McEwen mining. When big money is involved in the micro caps, you're going to get yourself a nice trade. It's just my own style, MP. I just like the way that minute candles move on stocks better than Unorenco. I really do. Everyone has their own personal style, and it's just mine. I mean, you may look at Unorenco on stocks and like it better. It really, really doesn't matter. It's really your own personal preference. And honestly, there is no real rational reason for it. I just like the way it moves better for me. Hey, Theo. It's $9.97. Remember, it's lifetime. Hey, Eric. Oh, thank you so much, Eric. How many template? I don't know. Eric, we have so many. It's freaking unbelievable. Eric asked me how many quant lines we have. I mean, Sergio's developed a library, the size of the National Library of Congress. So we have an enormous number. You know what, Eric? I honestly don't know, but it's in the hundreds. That's the number of quant lines we have on stocks. And perchance, if you happen to trade a micro cap or small cap stock where we don't have a quant line, we can make one for you. Hey, Givenson. It's not available directly on TradeStation. Unfortunately, what you're going to have to do is you're going to have to take the signals off a Ninja, off a demo feed, which we can provide you. That's the most often asked question, and I want you to know that we're in the process of putting it on TradeStation. I have an independent contractor working on it, but I don't want to mislead you and let you know and give you any date as to when it's going to be ready, because all these multi-time frame indicators take a lot of coding work, and TradeStation is not an easy system to use with multi-time frame indicators. So he's working on it. I don't know the date that it'll be ready. When we get it, if you're aboard, we'll obviously give it to you. But I don't want to give you any misinformation. Hey, Peter, we have to pay any Ninja Trader fees if we're going to use the API to TOS. Nope, nothing, Peter. You pay no Ninja fees, no Ninja Trader fees. Because remember, you're trading off a demo. You're actually trading off a Thinkorswim, and you're using Thinkorswim to power Ninja. And Thinkorswim is one of the better. That's what I use. If I had my control panel up, I'll show you. I configured it. It's called TD Ameritrade, and what's really wonderful about it, if you're trading stocks, you can get every single ticker in the universe to appear on your Ninja Trader. It's really a great feed, and you'll pay no fees. Hey, Thomas, for the monthly coaching next week and find out the date and time. The monthly coaching, Thomas, is just part of this program. If you own the software, you'll be invited. If you don't own it, there's no one-time fee for it. Hang on a second here. This is locked. I can't move it, but just give me a second. It'll unlock. No, I don't want to push it too hard because there it goes. I think I went through what you get, Theo. I mean, all the add-ons, all the upgrades, the coaching calls, and all the support is basically what comes with, and you get a month in the trading room. Okay. Hey, Terry. The tracker, it's all coming off a Ninja, but you can take it on any platform you're trading. Are there any real-time trade room open house for people to check it out? Stu, just give us a call. Hey, Fang. Hey, thank you so much, Fang. Hey, Will. Yeah, we do accept PayPal, Will. If you just send us an email, we'll send you our PayPal link. We don't put it on the website because it's not our preferred method, but we do have a PayPal link. And thanks for coming aboard. Just send an email to info@rightlinetrading.com. So one thing I forgot to put in here is our email address, but it's info@rightlinetrading.com. And you can go to our website at www.rightlinetrading, and our email is info@rightlinetrading.com. And I'll have Rory come in and actually, Rory already checked it off. He sent you a PayPal link, Will. Hey, Theo, absolutely get the scanner as well, Theo, and Sergio will configure it. Whatever time frames you want to trade, he will put in there, and they're all modifiable. If you want to change the time frames and you're not really sure how to do it, give us a call, and Sergio will do it for you. The last thing that I want on your head, honestly, is the tech component of this. The only thing I want you to have on your head is the patience and discipline it takes, to get winning trades. I don't want you to have to worry about any of the tech aspects of the software. I will tell you about that font in the trading room. Hey, David. Oh, thank you so much, David. David Stell, teaching style, good mentor, great system. Thank you much. Hey, Jeff. It does not include the NDT execution module, Jeff. But if you call and speak to Rory, I think he'll give you a huge discount on it as a complete package. I mean, that's really a piece of standalone software that took us over a year to make, that we're still sitting and waiting for a patent on. I mean, we've been waiting for 2 years and have submitted 3 revisions to the patent office. So that's a separate piece of software. But I know that Rory will give you a big break on a lifetime ownership deal for it, Jeff. And that's the platform we use to trade off of. It's really advantageous. Hey, Theo. Yes, Theo, just give us a call. Hey, Robert. Just talk to Rory. I'm in. Great to have you, Rory. Okay. You're so funny, Robert. Robert tortures me over this one thing. It has to do with the fact that I've been single for 14 years. I can't go into any more detail than that. Yes, you can get the PayPal link. Hey, Mitz. I'm based in the UK. Absolutely in the UK, Mitz. We have a ton of people in the UK, ton of people in Australia, ton of people in Canada, and you absolutely can use it in the UK, for sure. I know that for a fact because we have a lot of people there who do use it. Hey, George. I'm still in training mode, but was wondering when there might be a real in-depth training for knowing how to adjust the settings on Forex. You know what, George? Next week, we're going to do that. I'm going to have Rory, we'll sit down and meet tomorrow, and we'll have a session. And what we'll do is we'll set up a coaching call session for next week. And in that coaching call session, George, we'll go over all that information about Forex. Okay? Hey, David. Okay, Hemant. Oh, okay, you're H. Patel. Okay. We always use stop losses, Ray. We always set a stop. And the stop is based on the average true range of the instrument. It's all calculated mathematically. And our stop is really very unique. We're out on a reversal candle configuration. So what we really have is a constantly moving stop. As the trade, it's not a trailing stop. It's a little bit of a different kind of stop, but of absolutely set stop. Yes. Hey, Brian. Have the original software, auto, etc. Is the analyzer an add-on I need, or can I get it from Rory's? Just call them, Brian. Call Rory. Because I have no idea what he's doing. I have a feeling you're good. Okay. How important is it to belong to the trading? I noticed you offer a month only. You know what, Ray? The reason I offer a month is because I want you to be able to make that decision after the month is up. That's going to be your only recurring charge. But if I can make you in the course of that month $1,000 to $1,500 a week with my trades, and after trading, I give you an hour's worth of an educational material, which I do every day. I mean, sometimes we finish trading at 10 o'clock and I don't close the room until 12. You have the ability to pass or play on the room. If you want to continue on, you can, and you will get a charge. If you feel that you have become an independent trader, understand the system really well, then you can simply write us anytime before the month, and we will never bill you for it. So, and even if you get billed a day or two later, and because you forget, if you call us right away, we'll refund your money. I don't want you in the room unless you want to be in the room. So it's that month is to give you the opportunity to learn, to see what we do, to see how much money I can make for you, to take my trades, piggyback over my shoulder, and for you to make that decision. I will tell you, most traders stay, but some don't. Hey, Thomas. and start trading, and then people read the news 2 to 3 minutes later. Well, here's the thing, Thomas. That's what Thomas is saying is that doesn't the computer read the news immediately and start trading, and then the people read the news 2 to 3 minutes later and decide if the computer was right? Here's the thing, Thomas. On a Bloomberg data feed, which costs you about $20,000 a month to have, but all the big brokers and institutions have, they're going to get that information almost instantaneously. Like they get the crude inventory report. They get the unemployment numbers over the Bloomberg. That's what made Mayor Bloomberg a billionaire. I mean, one of them was his data feed, and it's 20 or 30,000 a month. So essentially, the market reacts immediately based on the retail trading craziness. But the big institutions get that data almost right at the time of the announcement, literally a second or two later off their Bloomberg feed. I have a Benzinga feed, which is pretty quick, but it's not a $30,000 feed. Hey, Theo. What you get for this option is you get that software, Theo. You get the, I'll go through it one more time because I want it to be clear. You get the coaching calls, you get the free lifetime updates, you get the quick start guide, and you get the market analyzer, and you get the software. That's what you get. Now, I mean, the only thing that you might want to add is the NDT, which is our execution platform. But you pretty much get this is a comprehensive system that will make you money. If it wasn't, I wouldn't offer it to you. Hey, Thomas. Sure, Thomas. Thomas wants us to post our Quant Line library, and I will post it there on the website, Thomas. Hey, Marvin. Wow, you linked the futures to the cash. That is definitely powerful. The trading emperor has made an indicator. Well, Marvin, I don't want to run too much overtime here. The bottom line is come on Friday at 1 o'clock, and I'm going to show you the indicator. It is a very, very amazing indicator. And I'll just tell you really quickly what it does. It looks at stocks moving. It creates two ratios. One, let's say you're trading the E-mini S&P 500 or the E-mini. It looks at the S&P 500 cash, and it takes the ratio of stocks moving on an uptick versus stocks moving on a downtick, and the ratio of stocks moving on up volume to stocks moving on down volume, and creates a long or short assessment. So when both of those metrics, the majority of stocks are moving on an uptick and the majority of stocks are moving on up volume, you're going to get a long signal to trade long on the futures market. And when both those metrics are trading short, most stocks are moving on a downtick on down volume, you're going to get a short signal. And it is it's not just that data, it's the way we synthesize it and the time frame that we use it. It creates a nice smooth line and a very nice directional assessment. It really does prevent you from taking losers and confirms your winners. Because it does, the cash markets and the futures markets correlate in direction about 80 to 85% of the time. So you're adding something of significant value to help you trade if you trade in the direction of this line. And there are only going to be four: one for the Russell, the NASDAQ, the E-mini, and the Dow. Those are the only markets that have their correlative cash markets. And that's what we're going to roll out. And that's going to become part of your system if you come aboard. I mean, Friday, you'll be watching it. and learning more about it, but you're going to own it. Is money flow tracker the same? It's not. Remember, the Trend 3 has the stochastic oscillator, and it does not have the correlative markets, MP. It's a little bit of a different, it's a different system. Hey, Ray, are some traders better with this system than others? You know, Ray, honestly, it's all based on your own discipline. If you adopt a system and you want to trade it, you have to abide by its rules. And you're only going to adopt a system that you are confident will provide you with winning entries, or else there's no reason to learn it. If you do learn it, then you have to religiously, it's like it becomes your theology. I mean, it becomes your trading dogma. You know, it's like your professional religion, not your personal religion. But listen, you have to believe that the system is going to work. And what makes one trader better than another is simply their ability to have discipline and patience, to wait for the juicy trades on that dark green background, dark pink, with that strong multi-time frame alignment and trend. When they get money flow in that direction, they're going to take a trade and it's going to roll for them real nicely. But you'd be surprised at how many traders cannot sit on their hands. And here's one other thing, because I'll throw out to you. You set a profit target for yourself every day. Doesn't matter what it is. It could be $200 or it could be $1,500 or $2,000 based on your risk tolerance, the amount of money you have in your account, et cetera, et cetera. Once you hit it, close your platform. Because I have so many traders in the room that, you know, if they leave it open, you're always going to be enticed to take another trade. You hit your profit target, you stop. And that's the part, I call that trading hygiene. It's like, you know how you wash your hands before you eat dinner? Well, this is one of the things you do when you hit your profit target. You close up, you walk away, and, you know, you go have a donut. You don't keep trading. And it will really, really make a difference in your equity curve. Hey, Gibbon said, no, my pleasure. Hey, Aid. It's Thinkorswim that it really has that great API. TradeStation, you have to trade a demo. And we'll provide you with the data feed. But Thinkorswim, you can run NinjaTrader for free and not pay anything. That data feed from Thinkorswim is really great. That's what I use. I labeled it TD Merit, and Sergio will do it for you. You don't have to do anything, Aid. Hey, Robert. Yes, we'll send you a recording. Don't worry about that. Can we download the software at Thinkorswim? Sure. You can download the, no, not the NinjaTrader software. You just go to ninjatrader.com and you can download a version. Thinkorswim software. You know, I've been with TD Ameritrade for 30 years. I opened my account there when it was TD Waterhouse in 1995. So you'd have to go. I think if you go to Thinkorswim, downloading the software is going to be pretty easy for you. And then if you go to Thinkorswim, they give you like 6 hours or 4 hours of free education on how to work Thinkorswim. They're really great there. They're the best broker. And I just want you to know, I just went long on Ameritrade because for the first time in 25 years of being with them, the wait time is 3 hours to get a broker. Now I place 99% of my trades over my phone or on my computer, but I needed to talk to a broker on one issue, and I didn't. And the wait time was 180 minutes. So based on that, I set an option spread up and waited for Thinkorswim to come down, and it just filled us today. Because I believe when they come out with earnings, they're going to be stellar. You can't even get through to them. They're crossing so many trades. We do the whole installation, Theo. We do everything. We're not just going to help. We're going to do the installation for you. After the 30 days, it's $249, Brett. And again, it's totally up to you whether you want to continue or not. If it isn't just part of the cost of doing business, and it's a financial burden, you shouldn't keep it. But I'm telling you, it's far more than just a trading room. It's really educational, but the trading that I take are all called out in advance, and we all sit and sweat over the trades. It is not a finagle room where I call out a trade when it's up 3 ticks or 14 cents. You see every trade evolve right in front of you, and you come in for that 1 month for free. You're going to see, and I spend a lot of time teaching, because afterwards I go through all the questions, and usually there are 25 or 30 questions I go through, and people ask great questions, and by the time I get done, it's another hour and a half. Hey, Terry, is the tracker mostly for day trading? No, it's great for swing trading, because you can set it a 1 hour, a 2 hour, like you said, or a 4 hour. You can even set a daily entry. So it's a terrific tool for day trading, or for swing trading. Remember, you're not going to get that many great swing trading entries. So that's where you can look at 100 stocks on multiple time frames and wait for that analyzer to go green on your 1 hour, 2 hour, 4 hour. And I'm telling you, I've got guys overseas trading daily bars. They don't get many entries, but when they do, they hold those trades for 10 days, 2 weeks, or 3 weeks. So you definitely can use that for swing trading. Very advantageous. We don't have an alarm, Ray, and here's the reason why. Oftentimes on stocks, you're going to get multiple buy signals at the same time. And if we set an alarm off every time a stock went red or green, like let's say you have multiple time frames. You set up a 2 minute, a 5 minute, a 15 minute, whatever you want. If you have one time frame and you look at, say, 25 stocks, if the market is in bull mode, you may get 4, 5, 6, or 7 signals, and it's going to drive you crazy. But if you have it in the upper left-hand corner of your chart, you're going to see that green light go off, and it really is going to be like a almost like somebody sent an electric shock through you. Trust me, you won't miss it. And that constant dinging will drive you insane. My pleasure, Jeff. Hey, Vincent. We're waiting for a patent on the NDT, Trade Execution Platform. And I just talked to the patent attorney yesterday. Unlike a lot of people, his name is Mark Terry, and he's located on Brickell in Miami. And I mean, he's a real attorney, and it's very hard to get a patent that has hundreds and hundreds and hundreds of lines of code. And it's been returned to us on multiple occasions for clarification or modification. It's a big pain. Hey, Theo, can we download the software at Thinkorswim, or we need to have, you know what, Theo, don't even worry about it. If you come aboard, Sergio will do it all for you. So don't even worry about it, honestly. You tell him what you need and how you want to trade it, and he'll do the installation for you from start to finish. Hey, George. No, my pleasure, George. We're going to do it next week. Is there a discount? Yes, there is, Ronald. If you call Rory, he will give it to you. There is. Hey, David, what time for day trading and swing trading? Hey, listen, David, the best times to day trade and swing trade are when the market's open, from 9:30 a.m. to 4 p.m. Eastern. But listen, you can trade the European session. You can day trade and you can swing trade the DAX. and you can day trade and you can swing trade Forex. And I used to have a room that was open at 2 a.m. Eastern, except I ran out of gas after 6 months. You know, I'm a single dad, and I have it at the time. I had a 15-year-old boy. I had to take him to school at 6:30 in the morning, and basically I was becoming a hospital case because I would still be ready to trade at 9:30 a.m. So I'd be up at 2 o'clock in the morning, then 6 o'clock in the morning, and then I'd have to get up at 9 o'clock in the morning, and I couldn't do it. So I had to close the Forex room, but we did really well in the Forex room, and you will get great trades on this system. Hey, Pablo. I asked about the trading room. I think it is a good option to buy the complete system and enter the trading room. Thanks for the webinar. Thank you so much, Pablo. It's great to have you aboard. Hey, Ray. Be great to have you, Ray. And I'm telling you, I tell you like it is, and you will see. I mean, I'm not a salesman. I am telling you the way the system operates. Okay, Marvin. Sounds very cool. Thank you. Hey, Theo. What trading platform do you recommend to use this software? I mean, listen, the best one is NinjaTrader 8. But I'll tell you, Thinkorswim's very good, but you're still going to have to look at the indicators on 8. I mean, that is its primary platform. And I don't want to mislead anybody who, you know, then thinks we can download the indicators on Thinkorswim, download them on TradeStation. I don't want anyone to be confused. They only go on NinjaTrader 8, but NinjaTrader 8 can be powered by multiple other platforms. Unfortunately, TradeStation is not one of them. Although if you trade TradeStation, you can still run NinjaTrader 8 off a demo. Do you offer? No, we don't on Sierra, Jeff. Do you know that? Do you know the truth is we had the platform operational completely on Sierra, and then we just jumped so far ahead on Ninja that the version we have on Sierra is outdated. So I would not give you that version because it doesn't have a lot of the upgrades that we have right now. And at some point in time, we'll bring Sierra up to date. But we spent 6 months putting it on Sierra, and then we just ran so far ahead of it on Ninja that we had to leave Sierra in the dust a little bit. So it is not on Sierra. Yeah, you're right. For the first time I've heard discipline and have a donut in the same sentence. You got it. Can you place your options through Ninja? I currently use TradeStation and Interactive Brokers, but with switch brokers. Ray, the only thing you can place through Ninja are futures options. Stock options, you're going to have to stay with IB. And Interactive Brokers powers Ninja. It has a great API. And we've done a lot of research into the kind of options you can trade right off of Ninja. And again, I don't want to mislead you by telling you, yeah. If you want to trade options on futures, which I personally don't recommend, although some people do it very profitably, I'm not, I don't know how to do it because I've never done it. I've always traded options on stocks. So you will need your IB for that, for your options trades. Hey, David. But hey, listen, they always run overtime. All right, everyone, listen, we'll send you a copy. We already have quite a few people on board, and I really appreciate you guys for coming. And I appreciate the confidence you placed in me, and I won't let you down with my end. My end is to bring you a system that works. And like I said, your end is just to create patience and discipline. And if we meet there, you will make good money. That's all I can say. If you dump all the stuff that everyone else has been trading for 30 years, you're in great shape. Have a wonderful, wonderful evening, a great dinner, and I look forward to seeing you tomorrow. Take care and have a great, great evening. Bye-bye, everyone.